Last week on the show, we had Ben Tejas, and he joins me again this week. Good afternoon, Ben.
Same to you.
Well, we were talking about tax reform, this new bill. Last week, we talked about how this was going to affect individuals. We talked about three quick ways, not quick, but we'll cover them quickly right here. 3 ways at which this will affect individuals. We want to cover those real quick if we could?
Real quick, yep.
Yeah.
First one, significant changes in the income tax rates. They dropped by a few percentage points across the board.
Which is good for most people.
Good. Most people, yep. Secondly, we talked a little bit about really the big change was the standard deduction essentially doubled.
Sure.
Okay, that was a big change. And then also changes in the estate tax law. Federal level now is twice what it was last year. So I think it's 3 big changes, and there's a bunch more in there that we'll cover down the road.
We have that entire episode last week on our Facebook page. So if you've liked us on Facebook, thank you very much. If not, go over to Facebook, like our page, and we've got that entire episode from last week on there. You can hear kind of the full story with Ben and myself. This week, we're going to get into kind of the business side. We're going to push that off one more week because I don't think we've covered the full gamut as to how this is going to affect individuals. And there's some major changes with this bill with regards to 529s and even at the state level, which we'll cover. But let's talk about 529s. Why are they a big deal here?
Well, they're a big deal. In our firm, Jared, just to back up, we're always talking with our clients about true wealth, which means we'll ask questions like, what are things that you would not change or not trade money for? And without question, we always get family, right? It's family, it's our grandchildren, with grandparents are always saying that. So we look at it as how do we best align our financial assets with our true wealth statement. And most people, that means let's save some money for our kids' college someday or grandkids. So 529s have become a big part of our firm here. And these recent changes, both on the federal and state level, are significant.
We talked about, before we started recording, that a 529 is kind of like a Roth IRA. Can you just describe that real quickly for educational purposes?
Yeah, it essentially is.
Okay.
It's a Roth IRA for college. So the money, when it goes into the account, you do not get a tax deduction for.
And you're putting money in after taxes. After you've gotten your check after taxes, you can
deposit in an account, and hopefully the thing grows over time.
Yep.
And that growth then is not subject to tax, federal, if used for qualified college expenses.
So then when you go to take that out, you've got that full money. You don't have to pay taxes on it, which is just the exact same way
as
that
it would
a
be the Roth for retirement money.
Okay, great.
So works fantastic for kids.
So the biggest thing with this new bill with 529s is the qualifying educational
expenses.
Okay,
Yeah.
gotcha.
So the federal change came from starting in 2018.
Right now,
up to $10,000 per student can be used tax-free for the costs of private elementary or secondary school. So if you're paying tuition dollars right now, most likely you could be taking around $10,000 in 2018 out of those accounts tax-free. You don't have to wait for college. You could use them now if you choose to.
Because it was always like with grandparents and even with our generation, it's like start saving for kids' college.
Yep.
And essentially you can be, but now you can be using those funds now for qualifying primary school.
Exactly. And that's the cool part. And it will come into play. In fact, we're working with a few clients right now that did a good job saving for their kids into 529 plans. And some of their kids didn't go to college for whatever reason, or the expenses they didn't use. Well, now they've got grandchildren, and we're looking at, well, maybe we can pull that money out and use it there. That way you don't have to pay that tax. Because remember, if you didn't use and don't use it for a qualifying college, or now for some of it for primary school, you're subject to a 10% penalty plus tax on the earnings. So here's another way you can take the money out without being subject to that penalty.
I guess the downfall to that is if you're using it for primary school, it's not going to be there for secondary.
Exactly. And those are the things you got to weigh out is, hey, if we're going to use it now, it's not going to be there for college. That's why we put it in the first place. But if you had money left over, it might work great.
We talked a couple of weeks ago about techniques in giving, and we talked about RMDs, required distributions.
Yep.
Does this work the same way? Can they use those required distributions to put money into this?
Absolutely. Okay. So we see a lot of our clients that are in their 70s, they got grandkids, and the IRS forces you to start taking money out of your retirement accounts.
Right.
What am I going to do with it? They always ask. Well, here's a great option. Let's put some of that money into a 529 for your grandkids then.
Oh.
And with these new tax changes, it's significant change.
And they might not even have to wait for their grandkids to wait till they get to college to be able to utilize some of that money
Some of the earnings,
due to
no.
this change.
Exactly.
So that's a pretty significant change.
It is.
Yeah, that's kind of cool. So that was the big one with this new tax bill. There's been some changes on the state level, which don't have anything to do with this big tax bill that we've been hearing about the last month, right?
Right, completely separate. But
Okay.
while we're talking about 529 plans, we've got to bring this up and talk about the change that Minnesota made last year for 529 contributions.
Which was what?
They, for the first time, offered a tax credit or a tax deduction for individuals putting money into 529 plans.
Okay.
Never done that before, as far as I'm aware. The credit works like this. If you put, let's just say, $1,000 into a 529 plan, you can get a 50% credit on that, up to $500 maximum. Okay, so there is some income limitations to that. Okay, if your federal adjusted gross income was over $75,000, there starts a phase out. We won't get into that today, but really for many people, if you put $1,000 into your kid's 529 plan, you can get a $500 credit.
Sure.
Just on doing your taxes. So that's the credit. There is income limitations for that again. Okay. If you are limited with the income limitations, you can then use, instead of the credit, you could get a deduction or a subtraction. So there's no income limits there. Okay. And a taxpayer may subtract up to $3,000 for a married filing joint filer by putting the $3,000 into a 529 plan. So again, you get a tax deduction there in the state of Minnesota, and it's another reason to be putting some money into these 529 plans.
This is something that people need to be aware of as they go visit their CPAs for doing their taxes for last year, right?
Absolutely.
Okay.
And that was, remember, everything we talked about in the federal level is 18 and going forward.
Right.
Okay, now. But 17, okay, you can get either that credit or a deduction on 17's taxes. So
Yeah.
you got to tell your CPA. Many times people, we haven't had that before, so they haven't told their CPA about their 529 contributions. Well, let's make sure you do this year, because you may, depending on your income, get either a credit or a deduction.
Well, how deep can we go? We're not CPAs, we're not tax experts. We work hand in hand with them. If people were coming to see us, how does this come into play with a general meeting that people might have with us?
Yeah, so again, we're not going to do your taxes. We're not going to give you tax advice, but yet we have to understand your assets and the investments that you're making, how they're relating to the tax code. So we're going to work in conjunction with a CPA when it comes to getting taxes done and these different rules, but we'll be pointing our client in the right direction so we do the best we can with their assets.
People listening, whether they're maybe thinking about opening up a 529, maybe they have one, maybe they're retired, maybe they're at that point where there's required distributions. What's your advice to people listening to this right now when it comes to this idea, these changes with 529s?
Give us a call.
Okay.
Let's sit you down, explain these changes in more detail, get everything out there, and that way we can help you find, again, your own true wealth statement, number one,
Yep.
and then make sure your assets line up.
Great stuff. Changes to the 529 with the new tax bill that was just passed. Also some state changes on the Minnesota level last year. This affects a lot of people, and I think is a really cool thing when it comes to these idea of 529s and really creating that legacy with your family, being able to pour into your children and your grandchildren. Ben, thanks so much for your expertise. We appreciate that. If you have any questions out there, please don't hesitate to give us a call. We would love to sit down with you and your family, again, talk about that whole picture and see how this may play into your life and your finances. Our number is 222-4236. You can learn more about us at our website, tejas.financial.com. I'm Jared Sebesta with Tejas Financial Group. Thank you so much for listening to this True Wealth Radio segment. Have a great week. Have fun with the snow here coming up tomorrow night. Should be fun. We'll see you next week.
If you'd like to set up a no-cost meeting with Tejas Financial Group, call 222-4236 or stop by their office on 19th Avenue Southwest in Wilmer. And you can always check them out online, tejasfinancial.com. Tejas Financial Group, inspiring true wealth.
Securities offered through HD Vest Investment Services. Member SIPC. Advisory services are offered through HD Vest Advisory Services. Tejas Financial Group is not a registered broker-dealer or registered investment advisory firm.